Before we look at the crop news, let's review the prices. This week, wheat traded at $7.80. That's 33 cents under the March contract. You could forward contract wheat for the 2022 harvest for $7.79. That's 28 cents below that July 22 contract. Corn could be sold for $5.75. That's 13 cents under the March contract. Or you can forward contract corn for 22 delivery at $5.70, and that's 24 cents under that December 22 corn contract. Soybeans were right at $12, 59 cents below the March contract, and 22 soybeans for the 2022 harvest was $11.65. That's 75 cents under that December 22 contract. Now, normally this time of year, that forward contract basis for soybeans is around 90 cents to $1. So that 75-cent basis is a relatively good basis. Cotton was trading at about $108. That's $3 under the ICE futures contract for cotton. And looking out on the December 22 cotton contract, it was $89, so about $86 for a cash contract price. The news in the wheat market is probably concentrated on the supply and demand issue. Demand this year has been above expectations and supply is relatively tight. You look at the world wheat stocks, about 10.1 billion bushels compared to 10.8, 10.9 in the last couple of years. World stocks are tight. U.S. wheat stocks are really tight, both for all wheat and hard red winter wheat. You have to go back to 2012, 2013 to see wheat stocks this low, and that's when we had $7 and $8 wheat prices like we have now. I think we need to look at that long-range weather forecast from the National Weather Service. The 1 month forecast is for high probability of above average temperature and a high probability of below average moisture. But when you get out to that 3 month, that 90-day long-range forecast, you're looking at the temperature in the eastern half of Oklahoma about average, on the western half slightly above average, which means if you're looking at December, January, and February, to average out to near average temperatures, you're going to have average or below average temperatures in February. And I think that's good news because they're looking at the moisture out in February to be average to slightly below average. So it looks like February may be a colder month and maybe a wetter month than December and January. And this has an impact because of high nitrogen costs. When we get out that February time period, February and March, and you're looking at top dressing, you're going to look at how dry those wheat fields are. And if they're dry, you're probably going to put down less nitrogen than if you have moisture. And at that time, you'll also want to look at those long-range forecasts. You want to look at world wheat prices. They're relatively good. I watched the CIF into Egypt. That's cargo insurance and freight into the Egypt port. This week they bought wheat for $9.44 a bushel. That's compared to $9.09 about 3 weeks ago, or a gain of 35 cents. Transportation from the Black Sea ports to Egypt was 68 cents. 3 weeks ago that was 95 cents. And if you go back last year to past years, is about 42 cents. So we've seen transportations go up to 95, back down to 68, and that's good. But what that means is that the wheat price the price Egypt paid for their wheat was 62 cents above 3 weeks ago, and I think that's positive for our prices. Australia, the rains stopped there. They're getting that wheat harvested, and that's good news. You look at the corn and bean markets. Mexico has been big buyers of corn. They bought 72.6 million bushels. Interestingly, 42.5 of it's to be delivered in 21-22 marketing year, but 30.1 million bushels of that corn is in the 22-23 marketing year. And that's something to watch on corn demand there. You've got Brazil, Australia, and Ukraine still, Brazil and Argentina planting corn, Ukraine finishing up their corn crop. They export 52% of the world's corn, so we need to watch those. In the long run, what I'm reading in the news is that there may be a shift from corn to lentils and soybeans. And if that's the case, that's going to support corn prices as we get out into that 22 market. Now, what's the impact that you have on the farmers, or what should you be watching on this? I think it's that high cost of nitrogen and nitrogen use and putting a tight pencil to it. I think the current wheat supply and demand situation is going to support prices at $7 or better. Put nitrogen down if you have moisture and if you can get it to pay. Also, when you're making that corn soybean decision, watch what's happening in the rest of the world about whether they're planting corn, the lentils, or soybeans.